Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everyone. Today is Tuesday. Welcome to PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. A lot of news today. There are probably a half dozen items that on any given day would lead our show, and they're all happening together here this morning. We have earnings, of course, from Johnson & Johnson and some of the major banks. We have a new iPhone out today. We have Amazon Prime Day. We have a COVID vaccine halt. That news was from yesterday, late overnight, Johnson & Johnson on that. We've got that on our radar. Hindenburg is going to be out with a new short report here in a few minutes. We don't know who, we don't know when, but we know it's coming. So a lot to get to on our show. We have two guests on today. First up at 8:35, we'll be joined by a new guest, Joel Kulina. He is the head of technology and media trading at Wedbush Securities. And then at 9, I'll be joined by Ryan Lange. He is the chief marketing officer of Next Green Wave, and he's going to talk about our cannabis event that is happening this coming Friday. So a lot to get to on our show. Joel, how are we doing here overnight?
Good morning, Spencer. Good morning, Dennis. Good morning, Mitch. Good morning, everybody. We're bouncing around like a ping pong ball here this morning. We're currently down 4.5 handles here at 35.28.50. We had a little dip overnight. We got down to 35.10, but to buy the dippers, they were out in full force, and they brought us back. I'm just going to get one number day. I know Dennis likes one number. And it's that closing price from yesterday at 35.32.75. We got by it high at 35.75, but I'm just something's telling me that's going to be a big number today as we look at the charts. Crude bouncing back from yesterday, down yesterday, back up today, up 84 cents at 40.27. Gold is in the red by $3.50 at $19.25.40. We have silver in the red too by 17.6 cents at 25.09.5. And Bitcoin over 11,000, not quite near 12,000. That's down $65 at 11,565. And don't have a big net change here, Triple D, but we got some action here on both sides of the market.
Yeah, it's one of those mornings here where you kind of figuring out where to look first, because like Spencer said, we have a lot of different catalysts. The tech trade, we're seeing the tech trade hot here again this morning. So reopening versus obviously those stay-at-home stocks, and that's the stay-at-home stocks are the ones that are winning here this morning, and that is thanks to Johnson & Johnson. Just after 8 o'clock last night, futures were trading a little bit higher, and they turned around and they slammed them on this headline. And can you give us that headline, Mr. Israel?
No, it was actually reported, I think, first by Stat News, but then Johnson & Johnson came out with a statement of their own that their COVID vaccine trial is paused. One of the patients developed an unexplained illness, though we don't know anything more than that. But that was the news from last night. Sort of superseding their earnings report this morning is the news that they are halting their COVID-19 vaccine trial.
And you see Johnson & Johnson taking that hit early this morning. So the 4 a.m. traders got a little overexcited, brought it down to 147. But remember, we had earnings on J&J too. So there's a double factor here going on with J&J. Give us the earnings.
Yeah, EPS beat $2.20 versus a $1.98 estimate. Sales 21.08 versus $20.2 billion. So a beat and a beat for the Q3 numbers. They also raised their EPS guidance for the year by 20, or they raised it, by 20 cents from, you can call it the low end of the range was $7.75. Now it's $7.95. They raised their operational sales guidance as well. So an earnings beat and a guidance raise, but vaccine halted.
And that's why the stock is trading down. That obviously trumps it, at least in the market's eyes this morning. You get down to that 145, 146, you got all kinds of support on J&J. So I'll just do one number, and I'm going to say my number of the day for J&J is 146. I don't even think it gets close to it again. It got down near there while a buck away from it there last night. it's decent earnings. We know the vaccine, as a relates to J&J, is not a big deal. So they're hitting it down because obviously there's still a race to who's going to get the vaccine first and when you halt your trial. But, we saw with AstraZeneca, we saw in the past, it's not a big contributor to the bottom line, even if they get this approved. So I think the earnings should trump it eventually. So I'd be a buyer of the dip on J&J.
Yeah, great area that you gave there. I'd see 4 or 5 lows. Dennis gave you one on the downside. I'll give you one on the upside. 151, 151.02 was the low from yesterday, and then that little bump that you had around just before 7 o'clock, you got over 151. So there's a possible trading range for you. I don't know. We're not going to get down to the 146, but look at that 151 as resistance here. Fill the gap from yesterday.
So that news, though, last night, not only bad for J&J, but bad for the futures. Obviously, they whacked those down, and bad for the reopening stocks. And you can clearly see this morning. Bring up the IWM versus the QQQ, and you got a 1.5% blowout, which is significant. That's clear rotation. So IWM trading down 0.5% with the NASDAQ almost trading up 1% this morning. If you look at the specific stocks in there, Boeing trading down, you've got the airlines trading down, you've got the cruise lines with their own headlines trading down because you got an offering from RCL, so that's slamming it too. I mean, we've said this before, when you have an offering to grow the company, it's always a good thing. When you have an offering that you need money to survive, it's never that good of a thing. So how big is this offering on RCL, Mr. Israel?
Yeah, it's significant. $500 million. That's significant.
They're just, and this is, do they say a reason? Just funding to finance their way, bridge finance their way through COVID?
Let me see what the release.
We would imagine, without even looking, it's probably just trying to get through COVID.
General corporate purposes. So no.
Yeah, trying to get through COVID. That's what it is. So I'll say it. And obviously, it's good that they can, get these offering prices. Did we get a price on it yet?
No.
And that's the other wild card. So where is the offering price set? And we'll find that out probably later on tonight. Usually they don't come out intraday. So obviously those numbers can become like a magnet, but we've seen this story again and again. People who buy these things early often get hurt because the offering prices sometimes is a lot lower than you think it can be. In the case of DKNG, it was trading around $60 or $57, $58 a day of the offering. And then they did the offering at 52. So you got to kind of wait. If you're buying, and obviously as traders, you can do different things, but if you're like an investor and like, oh, I want to buy this RCL, I'm going to use this pullback to buy. The way I play it is I wait till I see the offering price, because if they offer that thing way down the hole at like 63 or 62, it'll pull it down there, or at least towards it. So you could be early at 66. Maybe you get lucky and maybe the offering price is only 66, but they're still feeling it out. And when the market goes down the first day and they don't have the number figured out yet, investors want a discount, not to where it was trading when they announced the offering, but to where it's trading so that they can flip out of it. So if people are still putting in their numbers where they'd be willing to buy this thing, it's going to be lower than that. It's going to be probably, if they're shopping it around, people are probably more interested around 62 or 63.
Yeah,
so they can try to flip her out at 66.
Yeah, that's a lot of trading right there at 66. I mean, I did see a couple spikes to 67, but someone has an opinion here. We'll see. I mean, it's charts really don't make much when they have offering. That's the price. That's going to trump the charts here. Got up over 70, or was trying to get over 70, which is near the high of the range. But someone has an opinion here at 66. We'll be looking to see what that price is, and then we can look at the charts of these other ones. But where's Carnival Cruise Lines? 14.5, 15.
14? It is senior convertible notes though too, Spencer. I didn't notice if you did see that or not.
Yeah, I did. Yep, I should have mentioned that. I did see that. So okay. It's offering and notes.
Boy. 16 for CCL. You're not going anywhere until you take out $16, multiple highs there.
Yeah.
And then
Norwegian's NCLH.
Yeah, that's down too. I mean, are they doing any? Are they going out of any ports or doing anything? I really haven't. Well, they've halted everything, haven't they?
Halted everything, but interestingly enough, our Royal Caribbean did say they haven't been notified about any extended no sale orders beyond the end of this month. So the no sale order, as they know, it ends October 31st. So I don't know what that means for November, but I guess for now,
Tough. I mean, tough to be on these stocks, hanging out near the lows of the move. And I mean, every day, those ships sit there. They're losing money. It's a tough trade if you're looking at this on the
It's
long
tough.
side.
All these stocks are tough,
Yeah.
unless you're Disney and you can do financial
Oh,
engineering to
nice.
get your price up. So here's Disney. California parks are closed. The CEO was on CNBC last night, so I'm taking this information right from him on the Florida parks, and he said the Florida park is running at 25% capacity because that's all they're allowed to do because of the 6-foot regulation. Whether that's true or not, I don't know. He was very upset with California, saying that they should be allowed to open their parks. Health, obviously of the citizens, he wasn't that concerned about in this. He was more concerned about just getting his parks open. But let's look at the Disney situation. Like California parks closed, Florida parks 25% of capacity. You've got the studios, which are a mess. We know that they, a lot of the operations have been halted. I don't know if they've started shooting some stuff again, but it's a mess. We know ESPN's a mess. Sports ratings are in the gutter, so that's a mess too. The dividend has been temporarily suspended, and there's talk that they might just eliminate it for the time being. There's rumors on that it might not just be a temporary suspension, that they might make it permanent for now. So you have all these issues happening with Disney, which is the bulk, and I'm talking the big chunk of their revenue. Like parks are like 40%. We've looked it up before. And now there's all of a sudden, but let's figure out, we have one business that is doing really well, and that's Disney Plus. So let's figure out how to milk that for everything we can. So what do they do, Mr. Israel?
They announced a reorg. Is this a record in terms of activist demand?
Yeah, exactly. Good point.
Dan Loeb came out. It was a week ago. It was October. It was October 7th. He came out and said, you guys should halt your dividend and use that money to do more streaming stuff.
They didn't announce a halt to the dividend, but they're totally on with the streaming stuff.
Right. So
no.
Is the new CEO a pushover?
I don't know.
Let's get him on the show. I want to ask him that question. Is he a pushover?
Well,
I got some suggestions. Maybe they'll listen to some of my suggestions.
For all we know, they were already doing this. We don't know. But the biggest takeaway from last night's announcement is that essentially Disney is going all in on streaming, and they're throwing in the towel more or less on movie theaters. My biggest takeaway was that they're not gonna determine whether to launch release a movie online or in theater by like how grand the movie is and how big. They're going to do it based on how much money they can make. So if they think they can make more money releasing a movie on Disney Plus, they're going to do that and not release it in the theaters.
And that's got to be bad for AMC.
Oh yeah.
I mean, that's, and AMC's slightly down on this, but it cannot be good for AMC or Cinemark.
Yeah.
So I would think that's, and they're being ignored. They're not even down much. I mean, these things have been killed so bad. So maybe like you look at AMC and everybody thought, oh yeah, movie theaters coming back in September, and the stock just got cut out 50%. Again, we're back down to the July lows. CNK worse. CNK, I believe, if we're looking at that one, is actually it's almost back to the March lows. So theaters are pricing like they may be going out of business. And if they start pulling movies like Disney, we're going to make movies and we're going to release them on Disney Plus because we can sell Mulan for $29. I mean, it's smart. This is all very smart by Disney. So obviously some financial engineering here, like Joe likes to call it. You're getting the stock price up. The company's smart. This is a smart way to go about it. I think maybe they can make more money this way. If you can get these movies and you can just release them and have people buy them early. And I think, wasn't Mulan like $29?
Yeah, obviously
a lot of money.
Like obviously investors love to see the words, reorganization, corporate reorg, right?
All the buzzwords.
Investors love those words.
All the buzzwords were in there. And the algos were all over the buzzwords because by the time when this headline broke, the algos were all over this one.
Oh, yeah.
This thing was already up $6. Like it broke and like the algos were on it. There was no like, oh, I see this and as a human being I'm gonna go buy it. No, reorg, we like seeing all that stuff, like figuring out, how to get the most out of Disney Plus. So with all that being said, Joel, I'm gonna throw it to you in a second. But with all that being said,
I know what you're gonna say.
They were arguing last night, and Tim Seymour been on the show a lot of times, and Guy Adami also arguing that if Disney ever got the Netflix multiple, that, this stock would be a hell of a lot higher. Like if Disney ever got the Netflix multiple for their Disney Plus operations.
Ooh.
I am going to argue here today that Disney Plus already has the Netflix multiple. You know why? Because last year at this time, the stock was $130 and it had everything operating. We had no COVID. The studios, the parks were packed. I went to Disney. You can't even move in the parks, when it was a year ago. So all of their other operations suck right now, yet the stock is still trading at $130. So don't tell me that Disney Plus is not getting a hell of a lot of valuation in Disney right now. I think a lot of Disney's, well, the reason it doesn't look like the airlines, the reason it doesn't look like, the cruise lines, the reason it doesn't look like the casinos, one, it is Disney, so it wouldn't look that bad. But two, is it has Disney Plus. So Disney Plus is keeping Disney afloat here right now from a story valuation perspective. So if you think, they're just going to have this huge multiple expansion for Disney Plus, I'd argue that it's already occurred.
Man, that's why we pay you the big money, Triple D. That's really,
I'd argue
that's
that
great
it's already
analysis.
Occurred. You should write that up today, Joel. I know you like writing articles.
That's the kind
of that's what I think. I think it is already priced, and obviously if everything reopens, that's going to be good for Disney. So, but right now, if you're buying Disney, just saying, "Oh, it's Disney Plus is eventually going to be valued by like Netflix." One, I think a lot of it already is. Two, is Disney Plus as good as Netflix? I'm done watching
that's
Disney
the point.
Plus.
That's the point. At the moment, no. But that's
not even close.
But that's what Disney is saying. That's what they're saying. They're saying, look, they're basically admitting, look, we know that our library, we don't have as much new content.
There's no new content. I subscribed. I'm a paying subscriber. Right. I subscribed, did the 1-year plan. I might not renew it. You know why?
Really?
One, my kids have already watched all the cartoons on there, so they're kind of done with it. Two, there's nothing new to watch. It comes out with a couple new shows a month. Right. Netflix comes out with hundreds of new shows every month. There's awesome stuff to watch on Netflix. I just watched The Epstein. Did you watch that on Netflix? It's awesome.
Now, is that good?
It's good.
That's what they're saying. They're saying, look, we're going to just throw all of our resources behind developing new.
They need to do that.
New content. And we're not going to necessarily just throw it in the theaters. We're going to throw it on Disney Plus. So that's the bottom line is they're saying, bear with us. We know we're behind Amazon and we're behind Netflix. We're even probably behind Apple in terms of streaming content, but we're going to.
They need to do that. They need to, get behind Disney Plus, because I'll tell you, you're going to lose subscribers like myself if you don't get the content on there soon. The stuff they come out with is excellent. I mean, they can produce, and I'm not going to say that Netflix can produce better content. Disney can produce awesome content. I think Disney is some of the best content that's out there. But when they don't come out with new shows, like I've already watched The Mandalorian, and obviously it's hard with COVID. It's hard. But, even before we had COVID, like when did we get Disney Plus? Wasn't it like August or something, or September last year? Yeah. They had 4, 5, 6 months. It all came out, and it was like the first month, this is awesome. Okay. And then I was like, after the first month, I was like, well, I'm not seeing anything new. I watched The Mandalorian already, and they get the odd new show, but there's not enough new shows. So they got to get behind, and they got to get. You need 5 to 10 new shows a week, like 5 to 10 new things to watch to keep people interested. So needy. Netflix does it.
So needy.
Wow.
Netflix does it. There's so many things that go on Netflix. I'm so impressed with how, and I was a Disney versus Netflix. I was taking the Disney on, a year ago. But I tell you, Netflix produces content and some of it isn't the best, but they're coming out with stuff. So there's always something new to watch, whether you like it or you don't. There's new stuff to watch. So I look at Disney. I'm like, what is new on here? And they have a little thing, and there's like 4 new shows in the last month or 4 new shows in the last 2 months. I'm like, well, it's just not enough new content.
Okay, so with regard to the Disney multiple, though, I think the bottom line is, like, if they can make it through this storm, when the parks eventually reopen, that's going to be awesome. So if you could just and they're trying to just hold on, right? Just hold on until then. And if you're along Disney, like I am, just hold on until then, because when they do reopen, if it's in a year or 2, I don't know when, 2 years, whenever it is, that's gonna rock. So
I would agree with that.
Yeah.
So I'm not saying that we got to get full on bearish Disney. It's going down. I'm just saying you'd think when you're in a pandemic and all their businesses are running on fumes, that you'd get a little more of a discount in the price. If you're coming in thinking, oh, Disney's cheap at $130, right. It's not. I don't think it's cheap at all. This is the same price we were at last year. So you're getting a 0 COVID discount on a pure reopening stock. And every other reopening stock, you're getting a huge discount to buy it here. So the reason is Disney Plus. Are they valuing Disney Plus at too much? I think they are right now. I think the stock should be much lower. I think it should be down on $100. But, it doesn't matter what I think. It's what the market thinks. And this market obviously continues to just want a story. And Disney Plus is a good story.
Okay, let me back up for a second. Joel, did we get your levels on Apple from earlier? Or
Well, let's. I just want to do. Obviously, Dennis is not going to be buying the open here in Disney, and I think
No,
I just want to. I want to just point out the pre-market high, or it was after hours. They got this thing to 132.47, and this is a high right here at 131.77. So I would keep a real close eye on 132. And then also you can let this jockey around today, but keep an eye on the closing price, because I think that's going to, the street will be making their decision on, this move short term or long term. But I'd like 132 is resistance. If it gets back up there, I think this is a gift. If you lose 130 here, there's not a lot underneath that. So, and also the closing price, but 132. We'll see if it closes above 132. I'll be pretty surprised.
Well, I don't know where the stock's going in the short term.
Sure.
And I don't know where, and maybe you're right in the long term too. I'm not coming in here and building out the bear case. I'm just saying it's not cheap and a lot of good news already priced in. But we know from Mitch, we know from this the story trumps all. And this helps the Disney Plus story. So I'm not surprised it's up $5. Is it warranted from a valuation perspective? No. I don't think so.
Out.
But it doesn't matter. Valuation matters 0 if you got a story going. And the Disney Plus story is still cooking. So I wouldn't want to be short it.
Yep. All right. Apple here. Today's the day, right? 1 o'clock Eastern?
Today's the day, 1 o'clock Eastern.
Okay.
Let's
take out
just the trade. I mean, all the money was made on this trade by exactly how we set it up for you guys Friday morning, or there may have even been Thursday. We said buy it over the weekend. This is what the plan of attack was, to buy it over the weekend, to hold it into the event, like and sell it right before the event starts. And now I think if you've got that, you book it now, because this is ridiculous now. It's moved up $10 ahead of the event. It's moved up 8% in 2 days ahead of the event. It's one of the biggest moves for Apple, 2-day moves I've seen. I sold I love my Apple in my long-term invest portfolio, but I bought more for a trade. I sold it all this morning because I'm like, okay, this is a textbook trade that worked 3 times better than the textbook should work. Like you don't pick, I was figuring you pick up 2-3%. You don't figure you're going to pick up 8%. It ran 6.5 yesterday and another 1.5 today. What's the Kramer saying? Pigs get slaughtered, but bears
make money.
I butchered that one.
Bulls make money, bears make money, pigs get slaughtered.
Yeah, so if you're trying to milk it for even more and take into the event, greed. This is all, I think priced in now. Bonus money here this morning after the big run yesterday. Same goes for Amazon, in my opinion. I'm long both of these stocks. I'm not talking to you investors. I'm staying long Apple, staying long Amazon in the long-term portfolio. But any extra shares that I had, because I thought, I was going to have the pre-event runs and the pre-prime run, I have now sold. So because this is just a big move for Amazon here this morning too. Amazon rallying 167 points yesterday. Let's just throw another 43 on it here too, because Prime Day's here. Let's get excited. It's Prime Day.
Yeah. What are you
Sold
buying?
You.
What are you buying?
I don't know. What do you want to buy?
I don't know. At least
I'm buying nothing because I'm still trying to figure out where all my stuff's going, because I'm moving out of my house. So, so I need to sell stuff. You want to buy stuff? I bought a trailer yesterday.
You did?
I did. I bought a trailer yesterday, 16 foot enclosed. Because I was like, I'm looking, because we're building a house, right? So I'm like, I was like thinking about just storing everything in my cottage garage, but I got to figure all this stuff out. So I was like, you know what? Living around all this stuff, I bought a trailer, hoping to just store the stuff in the trailer and then sell the trailer when I don't need it anymore. So trying to work it out that way. We'll see if I can buy and sell trailers as well as I can buy and sell stocks. Probably not. So I'll probably get killed on the trailer, but
I'm short the trailer.
You're short that trailer. You want to see a picture? Look at the picture of the trailer. The trailer's nice. I sent you a picture, Joel. I sent you a picture to your phone last night.
Oh,
I
you
should show the
did?
picture of the trailer. It's a nice trailer.
I didn't even look at. No, you didn't. You must have sent it to another.
Oh, I
Joel.
sent it to you last night. I'm pretty sure.
Okay.
All right.
Anyways,
One.
sorry.
Someone asked for Apple numbers.
Yeah.
Pre-market high 127.32. You're a buck off that, right around. So use that as a target. If in fact you don't get over that, let's say first 15 minutes, first half hour, then I expect it to roll over a little bit. On the dailies, what do you got here? 128.84. So if you're really hungry and you'd say, that pre-market high is toast, then if you get near 129, boom, that would be your next daily resistance level. That day that it hit 128.84, it closed way down at 120.88. That was just coming off this was the split mania. This was the actual split. Those are the 2 days where they blew the shorts out of the water. And then this is where they flushed the toilet. So first things first, let's take out that pre-market high.
Buy
Okay.
the rumors,
All
sell
right,
the news.
it's almost as if AMC was listening to our show because they came out and they said that this is AMC Entertainment. This is the movie theater company. At this rate, our cash reserves are going to be largely depleted by the end of the year or early 2021.
Holy, look at this. I just did pull a Jason Raznick and predicted a headline before it happened. Look how good we are at this. We predicted a headline before
That's
it happened.
crazy. That's crazy.
No, actually, that was out before. That was out earlier. Sorry. That was out at 7:24, I think. So I actually didn't read that headline.
Yeah, you're right.
I predicted it, but it was already out there. So it's like you invented something, but somebody already invented it on you. So I take it back. That was already out there, but I hadn't read that. But you look at this. I mean, how do you figure now Disney's going to bypass you? For what reason, other than you're hopeful of a short squeeze happening, which already happened in August, do you want to own AMC and CNK? For what reason? I don't see, I don't think movie theaters were even doing that great. Were they doing that great before COVID, Joel?
No,
they weren't even doing that great before COVID.
No.
Now COVID, so it's like we've said before, you got a business that's teetering. COVID kicked it off the cliff. And I think, AMC and CNK, I think there's no light at the end of the tunnel. That's my opinion on the businesses. The stocks can have squeezes, which they have had in the past, but hard to be a buyer here,
definitely.
especially when you get news like this Disney, which I can't understand why those stocks are shrugging that off here this morning. If they're talking about buy, I mean, think about how many of the big, when we were talking Disney last year, think about the big movies, like of the 12, remember at one point, 12 of the big movies, I believe was in 2019, we were halfway through, 11 of them were from Disney.
Yeah.
So imagine Disney bypass. Imagine if they do, and obviously it's just talk here still, but imagine if they do indeed decide just to go straight to Disney Plus and bypass the theaters. Imagine that.
No, don't imagine. That's what they just said.
It murders them. How are they not down more today when they're talking like that? Like, how is CNK how is it down 2%? How is it not down 20% on that? Anyways, I'm no position in either of these stocks. But I would, after that headline, no way, no how would you get me or Joel's money or Spencer's money. Like, even if I was controlling them, I wouldn't put anybody's money in these theaters. And like I said, I don't know where they're going. They could short squeeze. They can do some stuff. And yes, they're oversold. Yeah. But who cares? News like this, I cannot see these stocks rallying.
It's hard, man. I mean,
we're gonna talk more about this with our guest Joel Kulina at 8:35. I want to go to some other movers though. Here's one that you won't see discussed on CNBC and your other outlets today.
What do you got?
I want to look at this stock is EARS, Auris Medical. Okay,
going off the board here, Mr. Israel. What's up?
Yeah, okay. So this is actually not the first time this has happened, but this is a case of mistaken stock identity. So here is the headline. Johnson & Johnson a year ago acquired a company called Auris Health, okay? Auris Health, and Johnson & Johnson is now being sued with regards to that transaction. Auris Medical, which is EARS, is up 80% this morning. Auris Medical has nothing to do with Auris Health. They are different companies.
So this Auris Health is private?
Yes. Well, Johnson & Johnson bought them. They're owned by Johnson & Johnson. That happened a year ago. This happened when that transaction happened too. But Johnson & Johnson owns Auris Health. They're being sued regarding that transaction. Oris Medical, EARS, is trading up 80%. On that headline, they have, or 75% now, they have nothing to do with this Johnson & Johnson Oris Medical headline. Again, Oris Health, Oris Medical, two different companies, and one of them is trading up 80%.
This punches a few holes in the efficient market hypothesis, Joel.
So if you're wondering why EARS,
it's a cool ticker symbol. Ears. Is Oris Medical do health with ears or something?
They should do hearing aids, right?
Maybe they do.
What
they must do something with ears.
Oris. Which one did you talk about? Oris.
Well, we're talking about the actual public, the one that's up 76%.
Oris Medical
it's got the cool ticker symbol EARS.
Yeah, they do like tinnitus stuff.
They do what?
Yeah, like hearing.
Oh, I need this company. I get that tinnitus where you get the little ringing in the ears. You're in a really silent room and you hear "nee." I get that every once in a while.
Yeah,
I never did anything about it. It's just been there for years. I just got used to it.
And what's the other stock? We got
it's not public. That's the point.
Oh, okay. Yeah, we've seen this trick before. And what was the one? Oh, that rave. That wasn't a mistaken identity trade. That was just
Hey, I see this trade occur. You're right, every once in a while, and it is ridiculous.
Wait, I want to interrupt you guys. We just got that Hindenburg report. Their new target is ticker LOOP. Hats tip to whoever had that in the chat. Mahul.
Loop Industries.
Yeah, Mahul had it in the YouTube chat. A hat tip to you. The report is out. Loop is the ticker. LOOP.
What the hell? Okay. What the hell is that? I've never traded Loop Industries before.
Well, you're about to.
It's down 35%. Hindenburg, they know how to blow things up.
This is their new target. So
they're really going after a high flyer here. Boy.
Loop Industries.
Whoa, boy, we're going after.
I'm seeing what the company does before we even read.
We're going after an $11.
It's a technology company. This is coming from just Google. It's a technology company whose mission is to accelerate the world's shift towards sustainable PET, plastic, and fiber, and away from our dependence on fossil fuels.
Yeah, it's plastic.
Lots of buzzwords right there from the company. That's pretty cool, but.
LOOP?
LOOP, Loop.
All right.
They're slamming it. So 2 days ago, or not 2 days ago, about 2 weeks ago, stock was almost $14. It's a 2-for-1 stock split, Joel. We're down here at 7. Thoughts, concerns, agreements. We've seen these as opportunities to buy stocks before. In some cases, they do turn out to be obviously sustained moves. In the case of Nikola, there was obviously where there was smoke, there was fire. In some cases, there's smoke and there's nothing here. So I haven't obviously read the report. It just came out. The initial reaction is slam it because Hindenburg says slam it.
I don't know what's my charts are not LOOP is not
Loop.
It's not picking it up for some reason.
Huh. There you got it. You got it now. Kind of.
I got it now, but I don't see.
Oh, you're not seeing the pre-market action.
Yeah, but I have my 24-hour chart on this too.
Well, that's weird. Well, I'm seeing it down.
It's down at $7.79, down 32% right now.
Yeah.
There's somebody that's just stepping up though with 25,000. They just went 760 to 770. They're like, give them to me. Now they're 780. 24,000 shares trying to bring it in. Maybe it's Hindenburg trying to bring it in. 24,000 shares come to Papa. They don't know how to trade though because they're chasing it up. Now they're at 8. You see they're bouncing. If anybody's
I'm so upset.
They keep coming up. The 24,000 is totally moving the price by chasing it up.
Oh man,
buddy! If you're trying to buy 24,000, first hands don't show it. Second, don't keep moving your price up. All those high. Now it's 810. They went 810. The 24,000. No, they're getting nothing. Oh no, they're starting to get done. When that gets done, then it'll slam down through it probably. But everybody's stepping in front of that thing. Oh, you just got a little bit.
Get a new.
Just got a few.
Well, no, what's going on? Spencer, can you want to try and pull it up?
Yeah, I've got it on mine. I'm not sure.
Pull it up.
I'm giving you the play-by-play as this 24,000 shares tries to bring it in, meaning they're trying to buy it. And they're chasing the price up. They chased it from 750 up to 820. Now they're at 820 bid. They just keep coming up. They're like, we got to cover. We got to get covered. It's 830 on them, and they just came up to 820. They've been handling with like 2,000 shares. Watch, they're going to come up again. They're totally scared. It's like old school dumb trading. How you don't fill an order 101. This is exactly how you don't do
what you do is you go 750 bid, and then when you start to get hit, you pull it.
You pull it. You go lower.
And then he goes 740.
He just went off board to get done. He panicked and went 844 instead of
sold.
It went off board too. Some off exchange market maker sold them all to 844. That's the top. Now it's down 815.
That's just like
Play
in
by play.
the pit when someone like a guy got
That's Ken
frustrated
Griffin
with an
says. You
order.
got him.
Guy gets real
It's under
frustrated
8
with an
now.
order.
That's how you. That's a 785 now. That's
Oh,
how you
boy.
don't fill an order. I was telling him he's doing it wrong. He was gonna get it cheaper. I should be a block trader, Joel. And there you go. There's 2 minutes in the life
That's
of
nice.
a trader that doesn't know how to trade.
It's funny.
I know I joked that DJ says was probably Hindenburg. Hindenburg knows how to put the reports, but they don't know how to buy. No, I don't know. Obviously we'll never know who that was, but whoever it was, they don't know how to fill an order.
That was great. All
right,
775. They just bought 24,000 shares up at 844. The thing's under 8 a second later.
They're calling NASDAQ right. Can I get an adjustment on that, please?
Well, you're not getting on NASDAQ because it went off exchange.
Wait a minute.
You got to call Ken Griffin.
You're not going to get changed. Anyways, before Dennis introduces our next
He's too
guest,
busy buying artwork.
First of all, he has a great name, Joel. And second of all, what he liked about our show, and Dennis, you just did a great rendition, is like he likes the ponies too. And he likes the action. He likes the way we call stuff. And Dennis, I have to give you like an A super plus on that. That was great.
Play by play. I
should
be a play by play guy.
Yeah, we should play instead of sports because there's going to be no sports. We can do play by play. But Spencer, introduce our guest and let's get on and talk about some other stuff.
Yeah, Joel Kulina is the head of technology and media trading at Wedbush Securities. Joel, good morning. Good day to have you on here, I think. We were just talking Disney. We were talking this Hindenburg short report. I don't know if you were following that, but good morning. And
good morning.
What's on your radar this morning?
Yeah, I mean, you guys touched on a lot. Obviously, I was off yesterday for the Canadian holiday, so I kind of was just looking at my screen.
Are you Canadian?
My wife is. So
you got a Canadian holiday and your wife's Canadian? I'm Canadian. I didn't even get the Canadian holiday.
Family time up north. And so, I mean, obviously yesterday's moves were mind-boggling. I mean, there was a lot of, you hear this morning narrative being, outsized option activity kind of returned, and that kind of people were speculating maybe what was the quote unquote NASDAQ whale back out there. But end of the day, with COVID, cases back on the rise globally, more restrictions obviously in London, across Europe, and US is becoming a mess. You saw the rotation back into growth, and it was fast and furious, and tech remains the number one beneficiary of the growth trade. There's an absolute scarcity of out there in the world, and that hence the kind of pause in the cyclical value trade that was showing some legs over the past couple of weeks.
Wait, Joel, I just want to ask you real fast. So we just kind of did the play-by-play on sort of how not to trade in the pre-market, but really to trade at all. How important is order entry and that aspect of your job?
Order entry in terms of,
well, placing your orders and managing your orders and like if you want to buy a lot of stock, for example, can you just like speak to that for a second? Because we just sort of called it as it happened in this LOP stock, and someone not doing. I
can say in a former life where I was more focused as a prop trader, kind of back in the financial crisis, 2007 to 2011, while I was based in London. The market structure has immensely changed over the past decade, and it's as you said, it seems like when you do get these type of headlines, it's all dominated by machines. Liquidity is extremely inconsistent, and that is one narrative that keeps coming up in conversations. So when you really want to go get, say, there's a headline and you want to get a block of stock, on board or sell a little bit, you really need a little bit of luck on your side and hope that you have the best tools on your desk, i.e. algorithms, or liquidity really can just disappear. And that's kind of one of the challenges nowadays as a trader on a cash equities desk, just the inconsistent nature of liquidity, given the rise of machines, CTA's involvement, and the retail frenzy into it all. And that's just become another element to it all.
Joel, let's talk. It's good to have you on. We were talking about Disney before. You are the head of technology and media trading. This is within your purview. What was your reaction to the Disney headline from yesterday?
Yeah, I mean, I love it. I mean, obviously, I forget which you guys were saying, how is this stock holding up as well as it has, despite, the exposure to theme parks. They have some cruise lines. Live sports has kind of been a train wreck as well. The price action tells you that this is a story that people want to own, and dips are being bought. You pull back the chart, going back to March, the stock has impressively been making higher lows along the way. And I think last night just really solidifies and strengthens their position as they look to control their distribution moving forward. And clearly there's a higher premium being put on their streaming business. They do lack content. But God, I mean, if you look at some of the other offerings out there, I think Disney is hands down the number 2 behind Netflix. I'd rather be long Disney any day of the week versus a short basket of, say, Viacom, Discovery, AMCX, Lionsgate, those type of older media companies that are really going to struggle to find their way in the new streaming world that we live in.
And like, what is your overall view of that industry, of that sector right now? Disney and exposure to parks notwithstanding.
Yeah.
We talk about the content providers, talk about Roku. What is your overall view? Like, how would you play that space right now?
I think you want to stick with the names that have gotten you here. I mean, I think you pull back the market 5+ years, you want to have exposure to secular growth. And that's where media, to me, is one of the most fascinating sectors. You really could almost break it down the middle, where you have probably 20 to 30% of the companies under that kind of hood that have just continued to outperform and grow their business and are obviously commanding a higher multiple. And then you have the names like Viacom. They had the kind of renewed marriage with Viacom and CBS and Discovery. Throw the movie theater stocks in that basket. So you have new media and old media.
Yep.
I think you want to stick with the names that have gotten you here, that have continued to perform well, because I don't see the trends reverting anytime soon. And I'm surprised we haven't seen more kind of acts of M&A out of desperation versus strategy. And it will be interesting to see what happens to movie theaters here moving forward. The group was already in a world of pain before COVID, and now it's just kind of another nail in the coffin. And I don't know where we are in that life cycle, but I think movie theaters will be a niche experience, especially for younger generations moving forward. And I don't think you want to have these in your portfolio other than for a trade.
We're on the line with Joel Kulina. He's head of technology media trading for Wedbush Securities here on Benzinga's PreMarket Prep. Joel, you also like to follow the chips in the tech sector here, and you kind of have the old tech and the new tech. And I actually noticed on your morning note that you were talking about some of the old tech here. Just to bring up one, Micron Technology. Just seems to be in a trading range. What's your story on this stock?
I agree with you right there, and that's what it is. It's a trading stock. The book value is still somewhere in the low 30s, so you're going to have that downside protection support. But memory is a commodity, and you're going to get these fluctuations on pricing. that just come and go. It's a cycle trade. You never can't be married to it, and you got to hope your timings, your entry and exit, you can time it pretty good. But this is a group of stocks. You have Micron, Western Digital, and kind of Seagate in the Western world, and people are becoming a little bit more optimistic simply on the handset builds have continued to lift in the second half of this year. Server pricing has been the weak spot. People see that return to growth sometime in Q2, Q3 of 2021. So I think as a medium term, long term trade, you can maybe play it on the long side. But again, I think there's much better plays in the semi space, whether you want to go after the analog names that have exposure to the V-shaped auto recovery, or even on the wireless side of things with kind of not just the iPhone ramp, but every other handset manufacturing across the globe has been lifting their builds ex Huawei. So, names like Skyworks, Qorvo, Marvell's a play on the accelerating 5G trends as well. So for me, memory remains kind of a dark, controversial spot within the chip space. You can play, trade the ranges, but be very cognizant. It's impossible to get too greedy in either direction, because, these stocks just kind of just chop back and forth.
Let's talk about the automotive sector here a little bit. Ford's showing some life. Benchmark upgrade got it going. GM is, it's had its ups and downs with the potential investment in Nikola. Tesla just hanging out here.
Yeah.
Oh man, it's looking like it wants to break out, but it won't. Is this let's just talk about the old automotive, Ford and GM, Fiat Chrysler, and talk about Tesla as well.
Yeah, I mean, as far as the automotive sector goes, I mean, I love it. We got more data overnight out of China, which continued to show, I think it was the third consecutive monthly gains over there. So the growth out of China has been impressive in terms of recovery post-COVID. Starting to see green shoots coming out of Europe, and I think slowly but surely we're seeing that in the North America as well. So you look down the semi supply chain, going back to early September, Citigroup held their big tech conference post Labor Day. You had multiple companies out talking up trends, whether it was Sensata, Microchip, STM, a wave of other companies as well. And then in terms of Ford and GM, I think these are cyclical ways to play the recovery. And even though, like, again, you're going to have these, starts and fits of the cyclical trade working in the U.S., but I see auto, industrial, and semiconductors. That's the way to play that moving into 21. Because end of the day, whoever's in the White House, we're going to get an increased stimulus, which should support these trades. So I like again Ford, GM, and then I like the names like NXPI, ST Micro, and Microchip in terms of the semi chain.
So you're looking at with the election, and I think that's the way the market's looking at it too, is like it's kind of like a win-win situation. If the Democrats get in, maybe perhaps get a bigger stimulus than was expected, and Republicans, the market has done well, other circumstances put aside. So that's kind of the way it's looking. And also you got the Fed taking the markets back no matter what happens.
Yeah, exactly.
Any election cycles? I mean, we've talked a lot about with Ryan Dietrich, and this all the statistics are pointing to a Republican victory. The polls are up and down. Any election cycle trends you're seeing here or like to highlight?
I mean, this is probably one of the most bizarre elections, at least in my lifetime. So I'm 41, but I don't know about anyone else out there. But clearly, you look at the guys are looking at increasing sentiment consensus that Biden's going to win. But again, who can trust the polls, like you said? And clearly, you look at names underneath the Biden long basket, and solar's at the top of that list. The names have gone parabolic. I know you guys have talked about TAN, SunPower over the past week or so, and again, if you're long these, and God bless you if you timed them right and you're seeing some nice gains, I think it's definitely time with the election within 3 to 4 weeks to probably look to protect some of that performance via puts. But it's clearly a lot of the money for a Biden win is poured into green energy. Yesterday we saw TAN crack yesterday. I think TAN was down maybe 330, 360 basis points. So I think it's its biggest decline in about 6 weeks. So that's something to keep an eye on. The solar names, which have been the biggest beneficiaries of Biden, more than I think it's Trump missteps more than anything. We know Biden hasn't been overly impressive on the campaign trail. But that's kind of one thing that I'm looking at, and increasingly is coming up in conversations with my hedge fund clients.
Yeah, and just a final note there, Joel. I was going to ask you that anyway, but what are those conversations like right now? I mean, what is the sentiment among people you talk to? Are they feeling good? Are they feeling bad? Do they feel like the election will have no effect at all on anything, or the other way around? I mean, what is the general sentiment of those conversations?
It's been a bizarre year because I mean we all know we saw tech just go again parabolic in August, with a lot of elevated kind of funky option activity being cited at various times as well. And then we had the big kind of unwind out of the tech growth trades, the first half of September, really over the entire course of the month, which was painful. A lot of P&L pain in that unwind that we saw. But it does seem like, given this election, with COVID, the uncertainty regarding how the election process is actually going to play out, we're going to have a contested election or not. Guys have been in performance protection mode now for a month plus. And you are seeing select stock picking, but it's been very kind of, story specific. So whether it's, again, like pushing the automotive part of the semi chain, or names kind of like, how to play the China recovery. We know they pretty much come back, full boat. So a name like Alibaba, right? The Chinese consumers bounce back impressively. Look at Alibaba's charts, just it's amazing. It's the dips are become shallower and shallower, and it feels like a coiled spring. Trip.com, a travel play in China, is a name other guys are increasingly talking about. So no one's giving up or getting too overly bearish or bullish on the election outcome, but just really trying to find stories that are kind of be less impacted by a Trump or Biden win. And that seems to be the kind of, again, the increasing narrative of the conversations that I'm having.
All right, Joel Kulina is the head of technology and media trading at Wedbush Securities. Joel, thanks for the time today.
Guys, thanks for having me. Love your show.
All right, thank you. We'll get you back on again soon. We're leaking here, Triple D. I'm not seeing any headlines here, but just tailing off. We tried to get over unchanged quite a few times here, and you seeing anything on the
Just
wires
incredible
here?
separation.
Okay.
The separation we talked about just on the top of the show is continuing here. IWM now down 0.8%. QQQ is trying to come in a bit here, but you are seeing the rotation right into, it's so predictable when you get a headline like Johnson & Johnson. You're seeing that tech safety trade come into play, and they are selling all of these reopening stocks as fast as they possibly can, besides Disney, which is obviously being viewed as somewhat of a, technology play because of Disney Plus. So it's imbalances, I would say, are not having much of an impact here. There's some of the banks are trading higher with the Citigroup, JP Morgan earnings, which maybe we should go there now, which we haven't given any love to at all, which is tells you how much we all love the banks, that they're the end of our show. They used to be like, oh, it's so exciting, the bank earnings are coming. We don't preview them. We don't talk about a run up before them. We don't even talk about, hardly them at all. And, now they get love here with 7 minutes to go in our show. But I think it's very clear that the money's running back into tech.
All right, so those bank earnings quickly, we'll do them together. JP Morgan, they beat on EPS and they beat on their sales. Citigroup also beat on their EPS and beat on their sales. Trading revenue was up. I think loan loss provisions were not as high as expected. And they were both good reports. Nothing really. And then JP Morgan said on top of that, they could resume their buybacks in Q1 if the Fed lifts them.
Spiked up a few times near that 105 level Dennis talked about. There's a pair of highs right here on the daily charts, 104.99, 105.21. I think that's where you want to get. You want to clear here for just a breakout, maybe a test of 106. It's been all over the place, been as low as 102.50. Well, that's the top of yesterday's range. So is 103. What was your close? 102.44. You lose that 102.44. I think you get a shot at under 101. Maybe not the 2-day low, yesterday's low.
It's hard to get excited though. Like 105. Yeah. Look at the 105 and how much. If you look out to the months, look how much resistance up there. Multiple highs in that area. You're a buck away from it. You think it's coming in on these earnings that are already out and blowing through 105 when the market opens? Yeah. I don't think so. So I think you got a clear-cut line in the sand of resistance that's just a buck higher. So it makes it hard for me to come in here and buy a bank stock when we have history that you see this on the banks again and again and again. It's like Groundhog Day. Bill Murray here happening again and again and again, where the banks pop up on their earnings. They trade up in the pre-market. They trade up for the first 5 minutes of the trading session. They pull a rug out from under and they all close red. That's what seems to happen every single time. And obviously nothing's 100% of the time, but I'm not going to say today is different because we've seen this set up so many times with the banks. They have okay earnings and they pop them up in the pre-market. And then by the end of the day, they're all in the red and they've given it all back and they're ugly. So it could happen again. And that's why I'd be more of a fader of the JP Morgan pop.
Also up $10, $13 from the low on the 25th. 91.38 low. Yeah. I mean, that's a big old rally. Yeah. I mean, so if you're in now and you're buying it now, then you're looking for major breakout. But been in a trading range, getting up near the top of the trading range.
How many breakouts have worked on the banks?
0.
Yeah.
Citigroup, how's Citigroup doing? Touched 47, but back into 45 handles.
Already leaking.
Yeah.
There's more room on a Citi though. Like JP Morgan, you look at Citi and you're like, wow, there's room to 50. Like JP Morgan, I don't see much room at all. So if I was picking my poison, I'd probably rather own Citi than JP Morgan, but I personally would rather be short JP Morgan. And I don't know if I'd short Citi because it's kind of in the middle of nowhere. That's the only reason though.
And then while we're at it, we should do Delta Airlines. Their earnings were out at 8:30. They were not good. EPS, they lost.
Shocker.
They lost $3.30 per
Oh.
share last quarter versus a $3 loss estimate. Sales of 3.06 versus $3.11 billion. Load factor, which is the percentage of their seats that were filled, 41% versus a 48% estimate.
That's with less flights.
Right.
Yeah, less
So
flights,
losing more money, less passengers, focused on cost cutting as you'd expect. Doesn't paint a
COVID
good picture.
ground zero.
Yeah.
So,
Yeah, I mean, when's the last time you've been on a flight?
no, I'm not going on a flight. I won't. And
Spencer?
obviously,
What about you?
A year ago, probably.
Yeah,
yeah.
I mean,
when you went on, did you drive when you went on vacation there for the last week and a half? You didn't fly?
I drove.
You drove.
I drove.
How long was that drive?
It was 10 hours each way.
And you would normally always fly that.
Oh yeah, you save 9 hours.
So you drove just because you didn't want to go on a plane.
Yep.
Yep.
That's it.
I mean, there's this portion of the population like me, Spencer. I don't know, Joel, would you fly on a plane right now?
no.
So
Going
there's
up northern Michigan.
Such a big portion of the population that's scared to fly, and I am in that. There's a lot of people who aren't scared, and that's the 41% that are like, this is just the flu. I'm going on the plane. I'll be fine. You probably will be fine. But until they win me, Spencer, and Joel back, it's going to be hard flying for Delta, and I don't see the light at the end of the tunnel here yet. Can you buy these things? Are you going to be okay if you buy them 10 years from now? We don't know. I've seen a lot of airlines go bankrupt before, so I don't think it can't happen. There's been a lot of airline bankruptcies. We have precedents for airline bankruptcies. So I think it's a coin flip. So a lot of people thinking you can't go wrong buying Delta at 31. Eventually it's going to be, if we go back to the $60 stock here again, I'm going to say I don't know that for sure. So I'm out, just not participating.
Wow, they lost $3, huh?
Probably
Over
good.
$3.
That's probably good expectations, really. I mean, it's tough when your planes, your break evens, flying at 65 or 70% capacity, flying at 42, and they have less flights than they used to because they've killed a lot of flights. It's tough go. There's, obviously a lot of layoffs coming, and they're trying to get money, some of these different airlines, to fund them through. They're looking for government money so that they don't have to lay more people off. But I mean, the writing is on the wall here. I mean, until we get a vaccine that we know works and we can all become confident that we're not going to go on the plane and get sick, it's difficult to invest.
All right. What else did we do? We did the Citigroup. We did the J&J.
I mean,
we did
that's
JP
it for our list. I want to get to one or two tickers from the chat if I can. I know there's a lot more in there. I've written them down. I'll cover the rest at 3:40, but there's one or two I want to do now before our next guest. And let's start with you, Unity Software. Analyst quiet period is over now. So it's an IPO from a month ago. You got a bunch of initiations this morning. Piper, Goldman Sachs, Credit Suisse, Barclays, William Blair, Stifel, all initiated at holds or outperformed. That's par for the course. You expect that. These are all the firms, just for context, that underwrote the IPO, that weren't allowed to have coverage on the stock for a certain amount of time. That window is now open. They can cover the stock. And so they're all going to come out at neutral or buy. You don't typically see any sell ratings. We did see it. I forget which.
There was one stock.
I don't remember. There was one like a month ago where
somebody did the underwrite, and then they came out with a sell on it.
Typically, you see a lot of neutral and buy ratings from the underwriters. It's nothing really unusual here.
Here's the issue: is this turned yesterday? We had the key reversal.
Yep.
And we closed on the lows, and we actually the high from yesterday coincides nicely with the high back from September 29th. So now you have the dreaded double top in place. I'd be a seller of all rallies in you. That's just my opinion, but I think the path of least resistance for you is lower.
Let's see here. Practically matching highs yesterday and Friday. 10042 on Friday, 101, and you sold off $10 from that. Dennis mentioned the two highs over here. For me, 90. Like if this loses 90, I mean, you can maybe hope that it will stop at 88.80. That was your 3-day low. But what do you see between 90 and 80 here? Or 90 and 85 at least. I don't like seeing a vacuum like that. 83.76. So weekday just kind of holding on in the pre-market, but this loses 90. I don't like it at all. And if it gets anywhere near 100, major resistance. What else you want to cover?
I had
Spencer?
two stocks from Angela on Twitter, and She wanted to cover Zoom and Roku. These are obviously two stocks that are loved by our chat as well, so we might as well cover both of these. She was concerned with that Zoom actually on a day that the NASDAQ was ripping, Zoom actually closed in the red.
Joel and I pointed that out yesterday. Yeah.
Yeah, so that is a concern. I mean,
Hang it
Zoom
out.
has been on such a run. Is this, we're talking about a stock that has went from 250 to 500 in 6 weeks. So it's doubled in 6 weeks from an already ridiculous valuation. So you can't look at this from valuation perspective because it's just stupid. So you can't look at it because eventually it will matter. And like I said, I think Zoom, when we look at it 2 years from now, is significantly lower. That's my opinion. So I would not put Zoom in my long-term portfolio and think it's going to $1,000. I think it's going significantly lower within the next 2 years. I cannot time that. I don't know when that's going to happen. The technicals are still okay. So trend is your friend. It's not great that it closed red. So good eye, Angela. Bad relative strength yesterday from that. That is concerning. I would say, if you lose and it's so far down, but that 462 area from
I'd even go tighter than that, Triple D.
You'd go tighter than that?
Yeah, I'd say there's 30-point range between 472 and 503. I mean, that's really how actually 473 is the level. This has been in a trading range here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Let's call it 11 sessions within a 30-point range. So I think if you're a bull, man, you want to see this 500 over 500 close, and then just keep on going. On
and
the
it
downside,
failed there yesterday.
Yeah, it failed there yesterday. And who gave it the pump? So was it a Jeffries guy or somebody? Yeah,
Johnny come lately.
Yeah, they tried to push it.
No, I think that was Laura Martin, and she's been bullish the entire time.
Okay.
Oh, okay.
So she just raised her target. Yeah, we did give her forgiveness after we said that because it wasn't coming out of the blue. Just raised her target. Who's been?
I tried to get her on the show, but she's one of the few West Coast people that said it was too early to come on the show.
Too early.
Well, actually,
gets the worm.
I'm glad you mentioned that, Joel, because our next guest, I believe, is from the West Coast, and I want to bring him on now because I know it's early for him. So, Dennis, you are, Dennis and Joel, you hang out.
I have to go trade, but I'm going to be listening in.
If you guys want to throw 1 or 2 tickers in, I'll let Spencer run with the interview with Ryan. I'll do a couple tickers, and then we'll call it a day.
Yep. So our guest now is Ryan Lange. He's a chief marketing officer at Next Green Wave. I'm trying to bring on his camera right now and his mic because I know he's in our Zoom, but I can't see or hear him. So Ryan, I know Ryan can hear me, but I'm having a hard time seeing or hearing him. So Ryan will be presenting at the next Benzinga Cannabis Capital Conference, which is this coming Friday, actually, if you can believe it. We have one every month. There he is. Ryan, good morning.
Good morning.
So as I was mentioning, you're going to be at the Benzinga Cannabis Capital Conference, or the virtual conference. It's this Friday. What are you going to be presenting?
It's actually our CEO, Mike Jennings, is going to be there. He's actually our head cultivator and the facility up north.
Right.
But really talking about how Next Green Wave. Can you hear me?
Yep.
Okay. Yeah. So really talking about Next Green Wave, we've surpassed 6 months of positive cash flow and profitability, which is a big milestone for us. And also a big milestone for cannabis companies. There's not many profitable cannabis companies, and we're proud to say we're one of those. He'll also be probably talking about our flower program that we're running right now, where we're running a pheno hunt looking for rare genetics, continuing to improve and grow our production capabilities. Probably also talking about how our branded products are expanding across California right now into retail, which is a big thing for us.
Can you talk about the importance of branding with cannabis? Because there's so many, I don't know how many companies and products, and different types of products, different brands of those types. How important is branding, especially when every state is sort of its own market? Can you just speak to the importance of just how you somehow get your brand to stick out?
Sure. Yeah, there's been a lot of probably talk around brands this year in cannabis, and it's kind of gone. You've seen a lot of big brands kind of fail by hitting and talking to the market in the wrong way. The cannabis industry is a very particular industry as far as the way they look at and view at brands. For us personally, we actually stepped back from having multiple different brand relationships and really focused on our own core brand, which is the NGW brand. We have seen a real positive impact since that change. I think consumers are looking for transparency from brands. So they're really looking to know what's happening behind the scenes, understanding processes and understanding the products that they're getting at the end of the day. So we let our products lead, I guess.
As a cannabis operator, what do you think investors need to know? Because there's, obviously the Canadian operators, the big ones at least, sort of were the first ones, ahead of the curve, so to speak, and they've sort of been punished for all the euphoria from a few years ago. But what do you think investors should really know about how to look at and judge these operators?
Yeah, I would say there's probably a lot of investors that have invested in the cannabis industry as a whole that kind of feel burned by the industry. I think that really what it comes down to is having to do your homework and really understanding the teams that you're investing in, because at the end of the day, you're investing in the people that make up that company. Our CEO, he comes from a family of cannabis producers. His father produced cannabis. There's actually a great write-up in Forbes about him. As far as operating, we like to think of ourselves as, a cannabis company first, kind of an old school cannabis company first. Yes, we're publicly traded, but we're not a publicly traded cannabis company. I think there's a lot of the traditional publicly traded cannabis companies that had never operated in a cannabis industry before they decided to jump in. And I think really, like I said, going back to the team being the most important piece, we have a strong team of, both leaders and also innovators in the space.
I've been reading about this year being a record Croptober in terms of the amount of the yield that's out there. Is that still the case?
There may be potentially more cannabis hitting the market, but the demand is the strongest I've ever seen. We are oversold month over month, and it's really been just a kind of a wild time, this year in particular.
Yeah, that was my next question, is sort of how has COVID changed the business the last seven or 8 months?
Yeah, sure. I mean, if you've watched kind of our month to month revenue, the things that we've reported online, obviously our revenues continue to grow. Like I said, the demand for our products has continued to grow, not only on the wholesale side, but also on the retail side. So we were doing a lot of wholesale flower pre-COVID, and also some retail, but retail has really exploded for us throughout the last few months.
Interesting. And then which markets are you in? I know you're in California. Is it just California?
We're in California, but we are across California in most of the premier dispensaries that you'd look to find a brand.
Okay. Ron with Ryan Lange, as I mentioned, he's the Chief Marketing Officer at Next Green Wave, trades on the OTC markets and Toronto Stock Exchange also, I believe.
The CSE.
CSE. As I mentioned, he'll be at the Benzinga Cannabis Capital Conference, which I can't believe is coming up on Friday. Seems like every time I turn around, they're always coming up. I will put the link to the conference in our chats, not to worry. Ryan, before I let you go, just like, what is the biggest opportunity for Next Green Wave, like in the next 12 to 24 months? What is the biggest thing that you're looking towards?
Yeah, so like I said, we're optimizing right now we are, and in our current facility, we are, producing and selling everything we can. But one of the big things that you'll see coming up is our extraction facility coming online, hopefully by the end of the year here, which allows us, to make additional revenue through tolling and processing for others, but then B, it also minimizes our current production costs. So that's one of our big kind of moves that you'll be seeing in the future, and that we've been talking about and we're excited about.
All right, Ryan Lange, Chief Marketing Officer, Next Green Wave. Ryan, looking forward to seeing and hearing you guys at the conference.
Thank you very much for having me.
All right, that'll be a wrap for us. I want to do that like thing as I do. So if you like today's show, you thought we had some good content, hit that like button, hit that subscribe button. We appreciate that. I mentioned the tickers that I wrote down. We'll cover more of them at the afternoon show. I wrote down L Brands. I wrote down the Trade Desk. I wrote down Duncan. I wrote down Square. There are others. So we'll cover those at the afternoon show. I want to thank both our guests today, Joel and Ryan. Thanks to all of you in our chats, both on YouTube, on Benzinga.com, and on Benzinga Pro. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Tuesday, and we'll be back with you in the afternoon.